Good morning and welcome to TOITOI Japan Market Radio for Thursday, January 23, 2026. I'm your host coming to you from Tokyo. We're here to help global investors stay on top of the latest moves in Japanese equities, the yen, and rates. Joining me today is our portfolio manager who focuses on Japan macro. Let's dive straight into today's session.
Thanks for having me. Today's session was fairly constructive across Japanese equities. The Nikkei 225 closed at 53,846.871, up 0.294%, while the TOPIX gained 0.316% to finish at 3813.0. We also saw notable strength in the Mothers Index, which rallied 1.378% to 2,280.0, and J-Rights edged higher by 0.123% to 2029.5. On the currency side, dollar-yen pulled back slightly to 158.155, down 0.19% on the day. Commodities were mixed, with gold in yen terms surging 2.465% to 18,705.0, while crude oil rose 1.803% to 60.43.
That's a solid snapshot. Now let's turn to the big policy news today. The Bank of Japan held its key interest rate unchanged at today's monetary policy meeting. That decision came as U.S. equity futures slipped and global markets showed mixed performance. What's your read on the central bank's stance here?
The hold was widely anticipated, but the messaging matters more than the decision itself. By keeping rates steady, the BOJ is signaling a pause in its normalization cycle. Given recent global volatility and mixed domestic data, policymakers appear to be adopting a more cautious approach. Markets will now scrutinize the policy statement and any press conference remarks for clues on the timing and pace of future hikes. That has direct implications for savers, borrowers, and corporate profitability across Japan.
And how do you see this decision impacting the three main asset classes investors are watching?
Starting with equities, the rate hold is modestly supportive for the Nikkei and TOPIX because it avoids near-term headwinds from tighter monetary conditions. That said, the weakness we're seeing in U.S. futures could cap any upside gains here. On the currency side, the pause removes near-term support for yen strength. If U.S. rate expectations remain elevated by comparison, we could see the yen stabilize or even weaken a bit further. And for JGB yields, the hold means the 10-year should remain range-bound. Without policy tightening, there's no immediate upward pressure on longer-dated yields, which keeps the fixed income environment favorable.
So a cautious BOJ keeps the status quo for now. Staying with global risk sentiment, we're also seeing U.S. stock futures decline following a sharp drop in Intel shares. Geopolitical concerns continue to linger as well. How does that ripple through to Japan?
Japan has significant exposure to both U.S. equity performance and the semiconductor sector, so Intel's weakness is a meaningful data point. It signals potential headwinds for the global chip industry, which directly impacts Japanese semiconductor equipment makers and component suppliers. Think Tokyo Electron, Advantest, and others in that supply chain. On top of that, renewed geopolitical risk typically triggers safe haven flows, which can strengthen the yen and hurt the competitiveness of Japanese exporters.
Walk us through the market implications there.
For equities, we're likely to see near-term selling pressure, especially in semiconductor and tech-related names. If geopolitical risk escalates, export-oriented stocks across the board could weaken. On the yen, we'd expect probable strength as investors rotate into safe haven assets. That benefits importers but pressures exporters' earnings translations. And for JGBs, risk-off sentiment would drive downward pressure on yields as investors move into government bonds. That helps long-duration holders but caps any yield expansion. Key things to monitor are Intel's earnings guidance, any escalation in geopolitical developments, and whether we see correlation breakdowns between U.S. tech weakness and Japan's semiconductor supply chain participants.
That's a nuanced picture. Shifting back to equities now, we saw a strong rally in the Nikkei today, up 1.73% according to one report. Disco Corp. the semiconductor equipment manufacturer, led the charge with an exceptional 17.07% surge. That's a standout move. What does that tell you?
A 17% rally in Disco is extremely significant. Disco is a critical player in Japan's semiconductor and electronics manufacturing ecosystem. A move of that magnitude typically signals either strong chip-related demand or positive company-specific catalysts like an earnings beat, guidance raise, or new contract wins. It suggests investor optimism around semiconductor cycle prospects, which is vital given Japan's heavy exposure to chip equipment and materials through companies like Tokyo Electron and Shin Etsu Chemical.
And does that strength in one name have broader implications for the index?
Absolutely. The 1.73% advance in the Nikkei reflects broad positive sentiment, likely supported by semiconductor strength. Further gains in chip-related names could sustain momentum, particularly in the electrical machinery and precision instruments sectors. For the yen, risk on sentiment and equity gains typically provide modest support, though the impact is limited without broader macroeconomic catalysts. JGB yields are unlikely to see material impact from a single day's equity rally, but sustained equity strength could eventually pressure yields if it signals confidence in economic growth.
So semiconductors are a key theme to watch going forward. Meanwhile, we're also seeing mixed signals from the global risk environment. How should global investors with Japan exposure be thinking about positioning right now?
The key is to balance domestic fundamentals with global cross-currents. The BOJ's pause gives equities some breathing room, but U.S. futures weakness and geopolitical concerns create headwinds. Semiconductor strength is a bright spot, but it's sector-specific and vulnerable to any further weakness in U.S. tech. On the yen, we're caught between safe haven demand pulling it stronger and the BOJ's dovish pause potentially weighing on it. For now, I'd say the risk-reward for Japanese equities remains constructive, especially in quality exporters and chip-related names, but investors need to stay nimble given the external volatility.
That's a balanced view. Just to recap for our listeners, today we saw modest gains in Japanese equities with the Nikkei up 0.294% and TOPIX up 0.316%. The BOJ held rates steady, which was supportive for equities but removes near-term yen support. U.S. futures weakness and Intel's decline are creating some headwinds for Japan's semiconductor sector, though Disco's 17% surge today shows there's still strong demand in pockets of the market. Geopolitical concerns remain a wildcard for safe haven flows.
Exactly. And the interplay between U.S. rate expectations, BOJ policy messaging, and semiconductor cycle dynamics will be the three key drivers to watch in the near term. Global investors should keep a close eye on any shifts in those areas.
Perfect summary. If you're a global investor tracking Japan's markets, we'd love to have you subscribe to TOITOI Japan Market Radio. We bring you daily insights on equities, the yen, and rates to help you stay ahead of the curve. Thanks for listening, and we'll be back tomorrow with another update.
Thanks, and see you next time.